Hey everybody, I'm here today with Kim Peterson from Go Illuminate Home Loans. And I brought Kim on today because a lot of times people come to me and they want to buy a duplex and they're wondering what type of financing they can use to buy a duplex with low down payment. And oftentimes they think the only option is an FHA 3.5% down loan. But working with Kim over the years and some other lenders, I've learned that there's two other conventional products that you can do with low down payment. And I have Kim here today to answer some questions about them and just give a high level overview of them and see if they're maybe an option for you when you're looking for duplexes. So Kim, what are the other two conventional loan products that you can use when you're buying a duplex owner occupied?
Yeah, and I'll just mention that with FHA, it can be a great program, but the things we run up against with FHA financing that make it a little bit less attractive is the mortgage insurance is really expensive. As of right now, there's an upfront premium that's almost 2 percentage points of the loan amount. Wow, there's a monthly mortgage insurance premium that never falls off. So it gets really expensive. The other piece of an FHA loan that isn't quite as attractive is the appraiser scrutinizes the property a little bit deeper than a conventional appraisal.
Yep, got that peeling paint and cracked window panes.
Yes, anything built before 1978, they're going to look for lead peeling, lead paint, or any type of peeling paint. Yep. And then we're doing lead tests or scraping and painting in the middle of January. Those things can be a little tricky.
I've actually had that exact thing happen on an FHA property before.
It is no fun. And everyone tells me you can't paint in January, and then they always find a way. But it's definitely not fun.
Yeah, you can actually get away with just priming it and not actually painting it, which works sometimes.
It doesn't have to look good.
It just has to not be peeling. So I've run into those kind of drawbacks to the FHA program as well. But working with you, you've told me about the two conventional 5% down programs. What are those programs?
Yeah, so the one we try to use most often is the Home Possible program. It's a Freddie Mac program that allows 5% down. And it's based on current median incomes in your area. So in the Twin Cities area right now, it's at about 94,000 and change is the median income. So if you're making less than that, you could potentially qualify for the Home Possible program, which lets you do 5% down.
And is that household income? Like, let's say you have a married couple, do they both need to be below that threshold or?
Nope. They don't, not for that program. In fact, I have clients who have a base of 94,000 and then might get bonus and commission, and I only have to use what I want to use.
Okay.
So it's a little bit unique. I can use the 94,000 for their base, and I don't have to use the bonus and the commission if I don't need it to qualify. So that can be really helpful. This is for a first home purchase, but can also be used for a second home purchase as well. Cool. Yeah, and then the Minnesota Housing Finance Agency offers another program that's really similar. The terms are a little bit different. The rate is a little bit more expensive than the Home Possible program, but currently it allows for income up to 156,000. And again, that's just qualifying income that we're using. It's not household income or anything like that. So if our client isn't fitting into that Home Possible program, we oftentimes will jump over to use that Home Possible or the Minnesota Housing Program with 5% down.
Okay, awesome. And would you say the biggest difference between those two programs is the qualifying income and the rate? Are there any other differences or reasons why someone would pick one over the other?
Not really. Both of them can be used for a first home purchase or a second home purchase. So really the only discerning factor is if we don't fit into the Home Possible guidelines, typically based on income, we'll jump up to that Minnesota Housing Program and use that. You can even use the down payment assistance program with the Minnesota Housing Program. So if you're short on cash, we can consider that as well. Although it is paid back monthly over a 10-year period. So it does add to the total debt for the home.
Okay, great to know. I guess, let's say you have somebody who comes in and they're interested in maybe buying a couple of duplexes within the next 5 years, and they qualify for the Home Possible, subsequently the Minnesota Housing and an FHA. What would be your recommendation for, maybe order of using those loan types if they want to buy the 2 duplexes?
Yeah, that's a good question. And you know, one thing I didn't mention that is a big difference between the two is on the Home Possible program, you can do a 2 to 4 unit.
Okay.
The Minnesota housing program is a duplex only.
Duplex only.
So we love to use Home Possible right out of the gates, usually because that's usually when we can catch people when their income is still under that median level of 94,000.
Yep.
A little more flexibility with the 2 to 4 unit, and then the best terms. So we get into that Home Possible program. Sometimes next we'll use Minnesota housing for the next property. They always need to live in the property for at least a year.
Yep.
And then we always want to make sure that the next home they're moving into is serving a better purpose for their lifestyle or needs, for that need to move. FHA is interesting in that it doesn't have a limit of properties you can already own. So we oftentimes will use FHA as that third financing option to get into your third property.
Okay.
And then from there, a lot of my clients will move into more of a single family type situation where you only need 5% down at any time to buy a single family conventionally.
Yep.
So it's really a great method to acquire 3 rental units in the matter of 4 to 5 years.
Definitely. And that's kind of what I've learned over the years as well, but it's good to hear it directly from you and hear some of the nuances between the 2 products versus FHA too. So thanks for coming on. I think that was really informative, and thanks again.
Yeah, my pleasure.